Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Well, the screen is red, but it's a special day to everyone who's celebrating Gudi Padwa, Ugadi, and of course Navroz, which is on the 21st. Wish all of you a very, very happy New Year. I think we can all do with some peace, some tranquility in the world right now. It's also a special here in the CNBC studios because it's my colleague Rima's birthday. Rima, hi.
Hi.
Happy birthday.
Happy birthday, Rima. Wishing you only the best. Good year ahead, good day, and happiness personally as well as professionally. Have a blast today. Markets will be volatile, but on a personal front, have an absolute cracker.
Indeed. Thank you so much. Every morning it's special when I come and anchor with you guys. So I don't mind waking up every morning at 5 a.m. because I get to spend that time with all of y'all. But thank you once again and wishing all our viewers happy Gudi Padwa and new beginnings.
Man, it's a big birthday. No, not the big. Okay. We got past that. I know Rima for anchoring with her, I think, for 16 years. So it's a long, long time. But let's get straight to the market action.
I think I'll sort of walk to the screen and maybe just let you know what is the setup as things stand right now, right? So let's just take a quick look at the headlines. And, there is local news flow as well. But I want to start with the global news flow because I think that is essentially what's going to matter, right? And it's looking bad. If you were hoping that as the third week winds down and things will start to look a little better, sense will prevail, nothing at all. The world's largest LNG facility has been hit. Actually, I should have modified this to say that not just the world's largest LNG facility, the world's largest gas field has also been hit. So you're now really talking about gas and oil infrastructure being under attack, right? In a real sense. So you're climbing the escalation ladder and you're perhaps reaching a point where, who knows, right? These crazy things are not supposed to happen. But, well, it is happening. And you got to deal with it. Oil prices are, of course, at $111 a barrel. Bulk of the move happened last night. So I'll just quickly tell you what happened, right? Iran said that it's struck, that Israel has struck. Let's just go back to the first one. Israel has struck its South Pars gas field, right? Now, this South Pars gas field, the Pars gas field actually, is the largest gas field in the world. The South Pars gas field is on the Iranian side, and the north essentially is on the Qatari side. So this is a shared gas field, one contiguous world's largest gas field shared between Iran and Qatar. And Iran confirmed that Israel has struck this particular gas field yesterday on the Iranian side, which is on the southern side. Let's move on. Natural gas, and you would wonder why, right? Why is this happening? Natural gas accounts for about 79% of Iran's total generation of power. That is, I guess, they want to knock this out and cripple the Iranian government, the country per se, right? Now, Iran essentially said that energy sites in Saudi Arabia, UAE, and Qatar have now become direct and legitimate targets. So this all happened last night. The gas field was struck and Iran issued this statement, and then Iran retaliated by hitting a LNG plant in Qatar. This is the largest LNG plant in the world, by the way, right? Because they've got the largest amount of gas and they've got the biggest LNG plant as well. So, as I said, this is, in that sense, unprecedented in more ways than one. And, we can go into details why maybe oil, there are still inventories, right? Some countries have more, some countries have less inventories. But if you look at gas, inventories world over are pretty low. In the case of India, we sourced about 48% of our LNG imports from Qatar in 2025. So that's the problem, and that's the reason why I'm saying that this is not good. Now, the reaction last night in the market, S&P 500 down 1.3, NASDAQ was down about 1.4. Let's move on and take a look at what else, right? So combination of hawkish Fed messaging and rising energy prices. So the Fed was kind of a side story. But I just put out the fact that FOMC left policy rates unchanged, as was widely expected. And they also sounded a little hawkish. They said, well, because of the Middle East situation, it's looking, let's just move on, it's looking a little uncertain about what we can do. So they said, Powell said that if you do not see that progress on inflation, then you won't see a rate cut. As simple as that, right? No progress, no lower inflation, no rate cut. And of course, I mean, if anything, inflation expectations have been moving higher in Western economies, etc. Let's move on, please. And the 10-year yield jumped about 7 basis points on the hawkish messaging in that sense to about 4.27%. Gold prices, oddly, right? I mean, risk aversion usually leads to precious metal prices going higher, but gold prices were down 3.5% last night. And later tonight, you've got the March E-mini futures, which expire, which I think we'll need to watch. I mean, it may actually lead to more volumes and some volatility, etc. So just wanted to put that up. Now, these are the key levels. Just two levels I'm going to put out. We are here. We are at 23,830. And my sense is this uptrend that we've had for the last 3 days now perhaps is coming to a bit of an end. And from this resistance level, which is nothing but the swing high, and we, I think, crossed this intraday yesterday, and then we sold off from there. But basically, from this swing high, the market maybe takes a turn lower, and we'll see if we go back to the support zone, which is around 23,650 odd levels or so. So that's the range that you are very, very near term that you're working with at this stage. On the downside, remember the market got to about 22,800 something, right? 22,900 or so was the absolute low. I think last Friday or this Monday, 3 days back, basically. Will we go to that? That's another point. But in the very near term, these are levels that the market will tread. The GIFT Nifty will give you a quick sense of how we're likely to start, and then we will sort of move on. But that's the big story. Nigel has got the perspective on that's the GIFT Nifty, by the way. Implied open on your screen, 23,375, 340 odd is the GIFT Nifty at this stage. So it's a steeply lower start. The F&O positioning and the numbers out there, Nigel has got that detail. Nigel, over to you.
Well, that's right. The bulls are in for a challenging session on Goody Padwa, going by what the GIFT Nifty is suggesting. Headwinds galore this morning. The resignation, at the top for HDFC Bank, that will lead to the stock opening gap down. It's very important for the Nifty as well, not just as a stock HDFC Bank, because HDFC Bank on the Nifty has close to on 12% weightage. It's the highest weighted stock. Additionally, it's got very, very high institutional holding. Whether you look at the FI holding at around 48%, DI holding at around 37%. And it's a very, very large private sector bank. Highest weightage on the Nifty, highest weightage on the Nifty Bank as well. So that's clearly going to be making investors very, very nervous in today's trading session. And it will put pressure on the headline index. Besides that, the Fed chair will water down rate expectations. While Brent crude prices, well, it has surged overnight. Iran continues to threaten that oil facilities, Saudi Arabia, UAE, as well as Qatar. In fact, I was reading a note from Citi. They're expecting Brent crude prices to surge around $120 per barrel just in the coming sessions itself. So the cues are very, very gloomy. Plenty of headwinds today. Besides that, yesterday, remember, we saw a very, very sharp drop in the Indian rupee. And we could be bracing for some more weakness today. Yesterday from midday, towards the end of trades, you had the rupee actually that ended at the lowest level of the day. And today it could come in again for some pressure. So keep an eye out on that front. But the FI selling, that cooled off. Yesterday it was 2,700 crores. And I'll say only 2,700 crores because the lowest FI net sell number in the month of March. But today, we could be bracing for that number to perk up a little bit yet again because a large stock like HDFC Bank will be under some pressure. Yesterday, we continue to see some short covering both on the Nifty as well as the Nifty Bank because both those two indices ended higher. The open interest was lower. But just one point, on the Nifty March futures, it's moved into a bit of a discount in comparison to the premium. Remember, we'll have the monthly expiry that will play out in the following week itself. The FI net short positions, though, in the last few days, we've seen a good bounce, close to around 800 points on the Nifty. The short positioning is down by close to around 36,000 contracts. The clients, they've gradually been unwinding some of the long positions, started the week at around 1.5 lakh contracts. That's come down to a little sub that 1.3 lakh contract mark odd. The FI short positions holding at around that 86%. That's on the index futures. On the stock futures, actually, there were some shorts that were added in yesterday's trading session. Could be a bit of an arbitrage out there, but that's just one data point that I want to put on board. But the good news was after a while, you saw a good amount of put writing. Yesterday, close to 90,000 put contracts were written. Though the call writers for the markets on the whole, they are hoping that higher levels will get defended. So you saw a fair bit of action at the 23,800 call, 23,700 call, which brings us to the levels. Going by that call writing action, resistance is very, very firm at around the 24,000 odd mark. The reference point you have on the downside is the low that we made earlier this week at a little sub that 23,000 odd mark. So in terms of a range, we're likely to be in this 1,000-point range, just in the near term, and a breach of either levels will give us further direction. So that's the broad range that we're looking at. Now, since HDFC Bank is going to be under pressure, it has 12% weightage on the index. Normally, we see some kind of balancing that takes place. So I'll be keeping an eye out on the other big boys, Reliance Industries, ICICI Bank, Bharti Airtel, as well as SBI. One of them will have to play a so-called very good innings to hold one end up because the largest constituent is going to be under pressure. And since Manappuram Finance, well, they have got the RBI approvals with regard to the deal on Bain Capital to get joint control. I'll keep an eye out on Manappuram Finance, but also maybe Saman Capital. They're also waiting for approvals. That one's in the F&O ban. So I'll keep an eye out on this stock as well. Come up drastically from the top. Brace yourself. It's going to be a bit of a tricky session.
If you can just quickly put up HDFC Bank stock on the screen. I just like to say one thing, right? I mean, the resignation of Mr. Atanu Chakrabarti is damaging, no doubt, right? Because the resignation is not damaging. Most people leave, say for personal reasons, etc. And it's rare to see a person at an organization like HDFC Bank essentially saying that certain happenings and practices are not in congruence with my personal values and ethics. That's the damaging part. Now, we don't know the specifics of the allegation, etc. But I'll say this. The stock, I mean, if you're thinking about this, we'll wait for the specifics and there'll be a fair bit spoken about this one. But if you're looking at what the stock will do, just be mindful that it's trading at about 1.7 times F528 price to book, right? It's the cheapest in the last 20 years. So I'm not saying that this is the cue to go buy the stock. But if you're thinking about downsides, if you're thinking about shorting this name as trade starts this morning, I mean, just keep this in mind because markets are collective wisdom, and the stock's at a level it's not been. At least these are forward estimates, and those numbers can change, the book can change, and all of that can happen. But we know what we have right now is, I mean, a level which is the cheapest in the last 20 years or so. So surely there will be a cut, but there will be a large cut? I think that's where these numbers will start to come in once again. Prima.
And some important statements that Ritu has picked up from her sources were the exit of Atanu Chakraborty is not linked to the bank's conduct or any regulatory concern. The regulator themselves have had no concern with the bank. Nothing wrong with HDFC Bank or its conduct is what Ritu has picked up from her sources, and we'll try and connect with her to find out more on that. But the other big story was the FOMC meet. Now, on expected lines, the US Federal Reserve voted to hold interest rates. So no change, but that comes in on expected lines because the policymakers there are navigating their way through higher than expected inflation readings. Yesterday, the producer price inflation number was red hot at 0.7% increase on a month-on-month basis. It spooked the street. Plus, we're getting mixed signs in the labor market. The February data, remember the non-farm payroll data showed a sharp cut of more than 90,000 jobs lost in the month of February, and then that ongoing war. So listen in to what Fed Chair Jerome Powell had to say about Fed rate, the trajectory of what the Fed is likely to do in terms of rate cuts.
The possibility, rather, that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case. And of course, we don't take things off the table. And the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected.
And one part of the press conference was also about how long he will be at the chair in terms of the governor board. And this is what he had to say. We'll stay on as a Fed chair till successor Kevin Warsh gets the Senate confirmation. He will not leave the Board of Governors position till the DOJ investigation against him is complete. William Lee, Chief Economist, Managing Director at Global Economic Advisors, is joining in to talk all things global economy, macros, the war and the markets. Thank you very much, William, for joining in. 3 weeks in terms of a war almost coming to a close, and now energy infrastructure assets are under fire, and that's keeping markets on the edge. We've seen once again a spike in Brent crude prices to $111 per barrel mark. Take us through how you've read the war, the fact that it's gone on way longer than anyone's baseline expectations.
The markets are really trying to deal with this new shock. It seems as though we've had a series of supply shocks, starting from COVID and global supply chains, now the various wars in the Ukraine and now the Middle East. And what's remarkable, certainly about the global economy and U.S. economy in particular, is how robust GDP growth has been. With all of these supply shocks, we would have thought that all these fears of stagflation or recession or any kind of session you want to talk about would have really been much more dramatic than they turned out to be. So that's the good news. The bad news is that with this heightened market uncertainty and with local developments like what you just mentioned earlier about India's banks, the financial markets themselves are in a place where their main job of allocating capital is coming into question. And my fear is that all of this uncertainty is causing the massive capital flows that are coming into the United States, partly induced by the tariff incentives that President Trump has put in place to try to incentivize foreign direct investment into specific strategic sectors, are going to be diverted because markets are so nervous, they'll be diverted to safer investments like treasuries or more liquid investments. And that kind of diversion will actually be very harmful for the long-term growth of not only the United States, but also the global economy.
Yeah. William, hi, morning. Just a quick word, William, on the attacks on energy infrastructure now, right? For those who are in the Trump camp, right, and you certainly are, you've been a supporter, and, does it feel a little, not a little, actually a lot, as many have said, right? One of the promises was to get US out of all these wars. I mean, the opposite has been happening. So just, is there a political backlash within? Because, I think it's many believe, that we spoke with Jim O'Neill, he said the political backlash in the US essentially is what's going to force President Trump to wind this down.
That's right. There's a very short fuse that President Trump has to deal with. The midterm elections are just around the corner. We're starting to see early returns now, and a lot of discontent among the voters, not just because of the foreign situation, but also because the affordability issue is coming home to roost. So there are a lot of irons in the fire right now that will keep President Trump on the straight and narrow. And for him, I think that the compromise was that the threat from the Iranian regime was so massive and so certain in terms of an existential threat for not only Israel, but also for Western democracies, that they had to take action because of the nuclear threat. So that has led to infrastructure attacks and retaliations of the sort that seems like it's growing beyond where the initial parameters were. And that will show up in the elections unless they're resolved quickly. And I think we're hearing from more and more from the administration that they're trying to talk in terms of resolving these Middle East conflicts, resolving it in the time horizon of weeks rather than months.
Hi, William. Good to see you in, as always. William, what do you make of what the Fed had to say overnight? You started this year hoping that we get more rate cuts. Now there's going to be a new Fed as well chaired in the next few months. And also inflation has perked up and things are only going to get a little bit hotter from here on. Do you factor in probably no rate cuts for the remainder of this year from the Fed? And also a word on the Bank of Japan, because action's due there as well.
The very clear message from today's press conference is Chair Powell has told everyone we're going to get rid of that last mile of inflation. I think the focus will be on getting that inflation rate close as possible to 2% within, say, this year. And they're going to do whatever it takes in terms of delaying rate cuts in order to do that. The baseline case is still one where the tariffs, the energy spikes are all considered one-time price spikes. Now, as he said very clearly, we got burned on this one-time assumption before, because even though it's one time, it took much longer to pass through the U.S. economy than most people had thought and most estimates had given us. So he became very hedging in the way he talked about things in terms of, we just don't know. We just don't know. I don't remember any press conference where he said, we don't know, as often as he said during this one. So I think it's going to be very clear that regardless of what's happening in the labor market, unless it really collapses and the unemployment rate rises to 4.75 or hits a 5 handle, they're going to be focused on inflation. And for me, the prospect of having a wash regime come in to be able to have the wash maneuver that I described in this show of shrinking the balance sheet accompanied by rate cuts, the likelihood of that coming in place is certainly going to be pushed further down into the year, especially if the Senate doesn't confirm him. Chair Powell also has made it very clear he will stay on because he will not leave until the judicial uncertainty is resolved, and because he takes it as a personal case against him, which it is, because the administration has said you have mismanaged resources, you have bloated the Fed bureaucracy over the last 10 years, and that mismanagement is what he's being called to task on. It's not an issue of Fed independence, but rather managerial incompetence, and he feels personally responsible to answer that.
Okay, all right. William, we'll leave it there. Thank you very much for joining us. Good speaking with you. And we'll come back to you. Well, HDFC Bank chairman's resignation, of course, is the big story, as we've been pointing out. Now, what we're picking up is that the resignation is not linked to the bank's conduct or regulatory concerns. Ritu's here with what she's been able to sort of, put together with regards to this important story. Ritu, good morning.
Good morning, Prashant. The one-line takeaway is that this is a personal difference matter. Between the chairman, Atanu Chakravarti, and the top management. It is not linked with the conduct of HDFC Bank or any governance flags there or regulatory action or NPA or compliance link issues. We've spoken to top sources that are very much clued into what's going on at HDFC Bank, and it seems the exit, like I said, is not linked to the conduct of HDFC Bank, but the personal differences with the senior management. Now, the friction between Atanu Chakravarti and some of the senior management personnel has existed for a few years now, essentially stemming from the fact that the management felt Atanu Chakravarti, as a non-executive chairman, was functioning in a very, and I quote, executive style, which is the root cause of the issue. Now, although these differences had been building for a while and there had been disagreements on various issues that were linked to, the conduct of certain individuals, for instance, in the past, for the kind of lapses that had emerged, including more recently with the Dubai branch issue and how the bank handled that. But the resignation itself came as a surprise to the board. The board meeting was called last night at a very short notice. Even during the board meeting, we understand the board members quizzed Atanu Chakravarti for specific reasons for his resignation. But we've been given to understand he did not really offer much beyond what was stated in his letter, and that is to say, what was going on in the bank was not aligned to his values and ethics. We've also been given to understand that the exit has neither been directed by RBI nor initiated by the bank. So it was very much an individual level decision that was taken by Atanu Chakravarti. Given his abrupt exit, which came as a bit of a surprise to the board, which I repeat, while there had been differences, the resignation itself coming last night was a surprise. So in the meantime, the board, of course, reached out to Keki Mistry as a veteran of the group to step in for a short period until a new chairman is found. And the RBI subsequently approved his, chairmanship for a 3-month term. So we'll have to see where it goes from here. But for now, the one line I'd like to clarify again is that the regulator finds nothing wrong with HDFC Bank or its conduct. This is a personal issue.
Thank you, Ritu, for that. We'll keep coming back to you if you learn more on this story. It's a big one.
Ritu, Rima, I'll tell you, I spoke with someone this morning, early this morning, it's very senior at HDFC Bank. And of course, Ritu, I think it kind of sort of corroborates and with what Ritu said, right? It looks like personal differences. And the one line which stayed with me, what he said is that he was trying to run the bank, quote unquote, right? He was trying to run the bank. So these seem to be personal differences with regards to, as happens with any board, any company. And of course, the only thing is that this is HDFC Bank and right at the top. So
the words used were personal values and ethics, right?
That is from Mr. Chakrabarti's side, right? Which is what I said, right? Usually when you leave, you kind of sort of, but maybe he wanted to make a point and yeah, exactly. So is this the basic question for markets is this a bank-related issue? Is there some red flag? Is there some, the way it is, they're keeping the books or anything? It doesn't look like it's any of that. This is basically personal disagreements between Mr. Chakrabarti, and of course some other senior executives. And of course, it looks like they didn't get along. And, as I said, and as Ritu said, it looks like differences between executives who were running and their style of functioning and what they wanted to do, et cetera, et cetera. So a bit of a control thing here more than anything else. So for investors, the basic thing is, I mean, this is not, from what we understand, from what we pick up, not regulatory, not with regards to how the bank was run, because it's a lending business at the end of the day, and those decisions matter a whole lot deal. But it doesn't look like it's those things which led to Mr. Chakrabarti's leaving the bank. We'll take a quick commercial break here. The interactions which are lined up here on the program over the next 2.5 hours. 8:35, we'll have the management of Mastech to discuss the recent trend seen in the IT services space, and of course the AI play. 9:20, Neelkanth Mishra of Axis Capital is a market master of the day. I mean, I think it's pretty important with what's going on. 9:35, the management of CEAT joins us to discuss the company's F527 outlook and beyond. Management of Nazara, they've made a big acquisition, about 900 crores in total size. And towards the end of the program, the management of Lakshmi Cement to discuss, of course, the implications of the Iran war and, what happens for the business at Lakshmi Cement, and of course, the broader industry as well. Stay tuned.
Welcome back. Markets are jittery. The implied open for GIFT Nifty is lower by 450 points. At one point, it was down more than 500 points, 550 points lower. Crude prices have risen sharply, now $111, $112 per barrel. So once again, oil and gas names, the sensitives, will be on our radar. So this is time to talk about individual stocks. Our team is joining in, and let's begin with Sonal first. Sonal, hi.
Hi, good morning. Well, that's the big story, right? What's happening in the oil and gas space. Now, do remember last night, Iran issued an evacuation warning toward the oil facilities in the Gulf, especially Qatar, UAE and Saudi Arabia. And also, additionally, Iranian-linked drone and missile strikes hit key Qatar energy facilities in Ras Laffan industrial city, and it did pose extensive damage there. Now, do remember, this is one of the biggest LNG producing facilities in the world, big exports from there, so this causes a big disruption to gas supply globally. We did see crude oil prices going to that level of $112 a barrel. Gas prices rose as well. Additionally, UAE also has shut gas facilities, and that is an area where we get the maximum amount of gas from. So there are more disruption coming in the energy space. So keep an eye out on sectors, the oil and gas space. We have pains, and of course, we've been talking about how gas supply curves have impacted the entire value chain. So there could be some more pain in this space.
Okay, all right. Sonal, thanks very much. And we'll keep this. The big story, of course, is oil and gas and what happens there. More on this as we go through the show. Manappuram Finance is the other one, right? HDFC Bank was one, but financials, there's Manappuram in focus as well. Gaurav has got details. Gaurav, morning.
Well, good morning. If you look at Manappuram Finance, now they have got all the approvals which were required from the regulatory point of view for Bain Capital to acquire that stake that they were going to acquire in Manappuram Finance. Now, the last leg of this set was remaining, and now they have received for the subsidiaries, which is Ashirwad Microfinance and Manappuram Home Finance, they have received the requisite approvals from RBI for indirect change in control and management. And with this now, management is very confident that the acquisition worth 4,300 crores can be completed by the end of 31st of March 2026 itself. So in the next 10 to 11 days, we may see acquisition happening and entire fund flowing in Manappuram Finance. Now, the company has also said that they are actually intending to complete the open offer as well in accordance with the timeline prescribed by SEBI. Remember, this deal was signed in March 2025 last year, and at the same time, after the open offer, Manappuram Finance, Bain Capital will acquire stake anywhere between 18% to 41.7%. Now, brokerages are also very positive about it because Jeffrey says that this is actually going to be 4 to 5% book value accretive and 8 to 9% EPS dilutive. So all in all, they are actually waiting for this turnaround visibility to come, but they are also positive. Yesterday also we saw the stock was up 5%. So let's see how it performs for investors today.
Thank you. That's the other big stock to watch. Nazara Tech will be tracking that because the company is spending about $100 million to make some acquisitions in Spain, gaming companies, casual gaming this time. Vinny.
Hi, so absolutely now they're focusing a bit more on casual gaming. $100 million, that's around 900 crores odd that they would be paying for this. This is for the first 50% that they will be acquiring in Blue Tile as well as Best Play. The remaining is going to be on the basis of the EBITDA that will be calculated on a 6.6 times EBITDA trailing, and that could be done anytime before 2028. By 2028 is what they have said. Obviously, this is going to be more performance linked. It's going to be on the basis of the achievements that come in between calendar year 2027 to 2029 on revenue as well as EBITDA performance, and then that payment will be decided on what they will be making. So first amount that they'll be paying is going to be right now is $59.7 million. That is going to be at the first close of this acquisition, and then the remaining $40 million will be 6 months post this first close as well, and 50% will be any time by 2028. Now, obviously, the stock had already seen a run-up yesterday, around 6-7% run-up. So today we expect to see some mild bit of a green, but concerns remain in terms of free cash flow that's lying with the company as on Q3 was around 700 crores. So where is that remaining amount going to be coming in for is something that we'll watch out for.
Okay, all right. Thanks a lot for that, Vinny. Let's hop across to Ria. She's here to give us some more stocks in the news. Hey, Ria, morning.
Well, good morning, Nigel. Let's start off with Belrise Industries first. They are going to buy UK-based firm Chester Hall Precision Engineering, which operates in the component supplies space for aerospace, aviation, as well as defense. Now, this is being done at a deal value of rupees 164 crores, and the acquisition was completed at an EV to EBITDA multiple of 6 times. And as per the company, this is expected to be both EPS accretive as well as ROCE accretive from day one as well, itself. Moving on to Mazagon Dock, they have signed a $39 million contract with SCI for 1 unit of the 3,000 deadweight tonnage platform supply vessel. GR Infra as well has won an order. They have been declared as the L1 bidder for the rupees 2,441 crore HAM project from NHAI. The execution period for this is 910 days. And lastly, Vedanta will also be in focus today. They are going to be holding a board meeting on the 23rd of March to consider the third interim dividend for this financial year.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are the oil and gas companies, Manappuram Finance, Nazara Tech, Belrise, Mazagon Docks, GR Infra, Vedanta. Stocks with negative news flow are HDFC Bank, oil marketing companies and paint companies. But back to tracking the happenings in the commodities market. Manisha now joins in. Manisha.
Well, thank you so much for that. On my top list, of course, is crude yet again, and we've seen 4% of gains come for that one in the Asian markets right now. We are holding $112 a barrel. And with this gain now, we are up 50% since the West Asia conflict began. And it's not just the crude oil prices, natural gas, heating oil, gasoline. All of these commodities are trading anywhere between 3 to 6% on the higher side in the Asian markets and have gained anywhere between 30 to 45% since the West Asia conflict began. With the fresh attacks coming in on infrastructure in the Middle East, whether it is about Qatari facility or Iran South Pars gas field, the markets are looking at longer-lasting impacts of this. Even if there is no more attacks and even if there was a resolution coming in tomorrow, the world believes that it would take 2 to 3 months for the global energy markets to realign yet again. And it's not just crude oil prices. Much of the safe haven money seems to be going in case of the dollar index. That one is surged to nearly 100. And we are looking at money coming out of precious metal prices. So gold is now trading below $4,900 an ounce. Silver has declined nearly 20% in the last 1 week itself, just about holding $76 an ounce. And that's exactly the case that you're looking at in metals as well. Heavy profit taking there as well. Copper prices declined 2%. You had zinc, tin, aluminum all declined more than 1% in the overnight markets. And Asia is doing no better.
All right. Thanks very much for that. Manisha, we'll take a break. We are back. Energy is going to be the top focal point. We're back with the management of Mastic to discuss the recent trends in the IT services space. And of course, how's the developments in AI impacting how the business is being run. So Ashank Desai is going to be with us. Deepan Mehta of Elixir Equity is also with us in just a bit.
Welcome back. Let's talk about IT. IT led the rebound in the markets yesterday. There was a CLSA note where they said that after meeting with various companies, the large cap IT companies, One takeaway is that there is no increased evidence, or there is no evidence of increased deflation on account of the newly released AI tools. That provided some relief to the stocks yesterday. Ashank Desai, chairperson at Mastech, is now joining in. Thank you very much, sir, for joining in. This is Rima here. You know, what was also flagged off, from CLSA after meeting the managements of various companies is that there is some delay in decision making because customers are now testing the potential of these new AI tools. And then on the sidelines is the Middle East crisis as well. At Mastech, have you all seen any delays in decision making or ramp ups in deal?
See, I would comment it at a very larger level of industry. Nice to meet you. The whole issue of implementation of AI applications has to be seen in the context of organizations. Organizations are complex bodies, and you can't impose suddenly a new thing without many other stakeholders taking charge of it, owning the implementation of the program, changing the business processes if required, and above all and everything, ensuring that all the other guardrails regarding data, cyber security are in place. All this is a complex work. So technology is moving very fast, but we see the organizations cannot move that fast. It's not about only Mastech, it's about all the industry here, all of us here. It will not move as fast, and we have seen it years after years. If you take cloud, it took good 6-7 years to really take off. I remember talking about cloud in 2006 or 7, but it took that much time. Same thing happened about the digital. Digital thing started in 16, 17, but it took 3-4 years when it really started moving fast. So one has to understand the customers of Indian IT industry. They're all large customers, large Fortune 500, Fortune 2000, and such large customers. They will take their own time. It's not going to move as fast. So we are seeing it, to answer your question, that people are trying a lot of POCs. Of course, there is an implementation of AI also is happening. It's not that it is not happening. There are certain applications like implementations of large products like ERPs and all where AI is getting used. And that we are also doing that. But the point I'm saying is, it is just the beginning. Much more is going to come.
But I get that, these new AI tools cannot just be lifted and they can't replace the existing software services. That the lift and replacement doesn't work because enterprises are far more complex for that. So that point is well taken. But while the enterprises try and understand the best way to work around the AI tools to extract the maximum productivity, till you come to that conclusion, that what architecture you need, what suits you best as a company with the appropriate guardrails. Till then, there is a status quo on decision making. And that will slow down the revenue potential for the Indian IT companies. So to what extent are we seeing this delay in decision making? When do you expect that to turn? And therefore, what will be the impact on the Indian IT companies? Should FY27 be another very slow year of revenue growth?
So it is like this. Indian IT industry has been working for last 1.5-2 years to build the capability to address the AI market. It is about training people on people at a entry level and 3-4 year senior level, training them, training senior levels at understanding AI and applications of AI. All that work is going on over last 1.5-2 years. Impact of that has to be felt by our customers, which they are feeling now. So some of these things that you are talking in terms of delays and lag of implementation of AI is partly related to the supply part of it, apart from just demand. Once the supply of such abilities gets ready all over IT industry, you will see the initiatives by the IT industry to do large applications. We are all doing that. We are seeing now large applications being addressed by us because we have talent available to us. We have taken effort to make it happen over last year. We have built architecture. We have built tools. So some of the effect is going to be seen in FY27. So certainly there will be a better year than 26. I certainly feel that.
Okay, so FY27 should be better for FI than FY26. You've said that when it comes to mass tech, and I guess that holds for the industry as well. One quick question, when it comes to mass tech, you've spoken about committing to your clients 15 to 30% of productivity improvements over a 3-year period, which means a potential revenue deflation of 5 to 10% annually. At least there doesn't seem to be as much work to offset that. So two-part question. One, in terms, are we really seeing 5 to 10% revenue annual deflation for the industry? Or what would be the average if it's not this number to work with? And two, is there enough new volume to offset this?
Yeah, so that's the thing that, as you, Rima, said, that there is a productivity benefit, which has to be weighed in with the new work that we are doing because of AI. So it's not just reduction and nothing happening at the other end. We are seeing that where there is going to be applications of AI. We are using it. Let's take an example. Today, to do an AI, Rima, you need data sets and data which is of high integrity with a high quality. And ERP systems, Salesforce systems, are all these systems who are creating the data. AI will not work without it. AI just can't be imposed on something which does not exist. So ERPs and Salesforces and all other products and SaaS products are going to get a business to build the data. That's one part. The second part is even after creating the data, it requires large amount of reorganization and data integrity issues. So there is a work required at a data level. After that, AI applications start coming. So AI is going to drive some work at the tail end to make AI happen. And some of it is already started. People are implementing some of the systems to make their AI applications more productive. So one has to look at the overall system. AI is not one piece which can be just implemented without no implication anywhere else. It has implication to data, it has implication to infrastructure, it has implication to business processes. It's part of the overall system. That's the point we are making. And as it is part of the overall system, we do feel that some of these tensions or some of these constraints rather will get released as we move ahead, and more applications will be possible, which will kind of balance with the issues that you are talking. We are very confident. We have seen it all the time, Rima. See, this happened when multiple technologies were introduced. They were all introduced very slowly. When products came, you remember, you would be in the industry when that time SAPs and Oracles came. Everybody said, oh, there is no application required now. What really happened was SAPs and Oracles created a need to implement the product itself. And people started doing larger complex applications in the company because products were available.
Correct.
So service companies came and said, we'll help you implement. Now that came a little bit later. First product started coming, the implementation came later, and you know what happened. Today, large percentage of our revenue comes from on-premise and cloud industry. And we do, of course, cloud. But I'm just saying, all of this has to be seen in the system of evolution.
Okay. All right, sir. Out of time, but thank you very much for joining in. We take your point that maybe there is some cannibalization in the near term, but that structural opportunity is very much there. And the Indian IT companies have proved in the past that they are capable of adapting to every new tech cycle. But let's get back to the war in West Asia intensifying. And now it's the energy infrastructure assets which are under fire. Prashant?
This is important. I just want to put this up and just walked across to the wall. Because actually this is positive. This is good news if the peace holds. And I'll tell you why this is good news. Because this is President Trump posting on Truth Social, essentially saying for the first time, we're actually hearing some moderation from President Trump, right? He's saying that Israel, out of anger for what has taken place in the Middle East, has violently lashed out at a major facility known as South Pars gas field in Iran, which is what I was talking about at 8 o'clock on the setup link, right? This is the largest natural gas field in the world. And that was attacked by Israel yesterday. Now, President Trump goes on to say, and I'm quoting here now, a relatively small section of the whole has been hit. He says, and this is important, right? The United States knew nothing about this particular attack, and the country of Qatar was in no way, shape, or form involved with it, nor did it have any idea that it was going to happen. So, I'm assuming there has been so much pushback because this chain of cycle of escalation attacking energy infrastructure. I mean, it's basically mutually self-assured destruction, energy destruction, for the lack of a better way to put it. And obviously, people have sort of impressed upon President Trump that this must stop. Otherwise, I mean, essentially, we're going to go into an energy freeze in that sense. He goes on to say, unfortunately, Iran did not know this, that US or Qatar was not involved, or any of the pertinent facts pertaining to the South Pars attack, and unjustifiably and unfairly attacked a portion of Qatar's LNG gas facility, right? Then he goes on to say, this is the operative word, no more attacks will be made by Israel pertaining to this extremely important and valuable South Pars gas field unless Iran unwisely decides to attack a very innocent, in this case, attack, in which case, I mean, then he basically goes on to say that, we're going to bomb them and we're going to do an unimaginable damage, etc., etc. All of that, of course, is rhetoric, and we've heard that many times in every tweet, every Truth Social post of President Trump. I mean, he's basically gone on and said again and again that, we're going to do this and do that, unimaginable, etc. But the thing to take away from this, of course, is the de-escalation. I mean, people have impressed upon him that you cannot do this. You can't allow Israel you can't basically sanction the attack on energy infrastructure, because then you're essentially looking at, as I said, an energy freeze, basically. So I would say this is positive. Of course, the peace has to hold, and if the peace holds, this is a glimmer of hope in what was looking at 8 o'clock, even at 8 o'clock, a very, very dull open. GIFT Nifty will come up on your screen. I'm not sure if that is reflecting any of this at this point in time. It was down very sharply. If you can have the GIFT Nifty back up again. But I think, markets perhaps at some point will start to pay attention to this. They will first want proof of evidence that this is actually happening and no more attacks on energy infrastructure is taking place. If that is the case, I think this is not bad news. This is maybe incrementally a little positive. Back to you guys.
Okay, all right. Thanks a lot for that, Prashant. Well, we'll slip into a short break. On the other side, Deepan Mehta of Alexa Equities is waiting for us. He'll give us some fundamental stock talk. Welcome back. Hope you're having a good morning. The GIFT Nifty suggesting a sharp downtake. Hopefully by the end of today, we actually don't see that sharp a cut in terms of a 450 to around 500-point downtake. But Deepan Mehta, Director at Alexa Equities, joins us on the show. Hi, Deepan. Good morning. This has come out of nowhere, right? The shocker with regard to HDFC Bank, the ADR overnight was down close to around 7.5% or thereabouts. However, with the information that we have right now, there appears there is no operational problem with regard to the bank. This appears more of a personal drift. What is your view on the stock? And if it opens 7.5% lower, would you be a buyer?
Yeah, Nazar, good morning and thank you for having me on your show. I don't think it's a major concern from HDFC shareholders' perspective. But generally, we are not that positive on private sector banks, especially HDFC Bank. I think their growth rates are now below the system growth rates, and they have renewed competition from the PSUs and new age fintechs and NBFCs as well. And on the whole, I think that these banks are fairly valued. Also, I think they are overowned to a large extent. I mean, with 37% weightage in the Nifty coming in from financials, you obviously have a lot of ownership within that sector. So a correction in HDFC Bank is not a reason to buy. In fact, I think in the medium to long term, one should look at becoming underweight these private sector banks and work around the lenders through some other means, like, say, distributors or even multi-product NBFCs.
So you're saying that you wouldn't buy the dip and you actually will look at rotating out of some of these private sector banks that are currently a very large weight of the headline index. Is that correct?
That's right. Not immediately. I think, the time to sell anything in the market is looking more and more difficult. But yes, I think at a strategic level, in a 1 year, 1 to 3 year time frame, we intend to be more and more underweight, at least private sector banks, and maybe keep positions in the PSU banks. I mean, if you look at the PSU banks, banks like Canara Bank, Union Bank, their figures, their balance sheet quality, and their kind of all the qualitative factors are equal to or better than some other private sector banks. So I think that kind of arbitrage which was there is over and done with. And the best thing now is to just kind of focus on niche players within the banking sector or companies which are extremely attractively valued or have a high dividend yield.
Okay, Dipan, we'll come back to you at 9 o'clock. HDFC Bank will also be holding a conference call with analysts. Before that, let's quickly revisit the story. Ritu is now joining us on the phone line, and she's also been, trying to understand some information on what happened, which led to this resignation. Ritu, what have you learned from your sources?
Well, Rima, let me start with what this is not. The non-executive chairman Atanu Chakravarti's exit is not linked to any sort of governance or other issues linked with the bank. Our sources have made it very clear that there are no issues, regulatory or otherwise, with HDFC Bank. This is not linked to any red flags on NPAs or any kind of governance issues. So that is not the reason. The reason for Atanu Chakravarti's exit as chairman of HDFC Bank is very much linked to personal issues. Now, what are those personal issues? Our sources, multiple sources we've been speaking to inside and outside of the bank, and they indicate to us that the reason is that Atanu Chakravarti's style of functioning was very executive for someone who was a non-executive chairman, and that led to some differences between him and the senior management personnel of the bank. But that said, this is not a new issue. It is something that had been brewing at the bank for many, many years now. He's been, remember, the chairman of HDFC Bank since 2021, and these issues have cropped up on various occasions. But the exit itself came as a bit of a surprise to the board. The meeting, we understand, last night was called at a short notice after his resignation letter was received. And even during the meeting, the board did quiz Mr. Atanu Chakravarti, the reason for his exit, but he did not elaborate on anything specific outside of what is mentioned in the letter, and that is to do with the values and ethics not matching his own for the last couple of years. We've also been given to understand Mr. Atanu Chakravarti may have had some issues when it comes to the conduct of certain personals linked to past issues in the bank and the way they were handled by HDFC Bank. But beyond that, there was nothing more that was actually put on the record or detailed. So very much a personal issue, not linked with the bank. The regulator finds nothing wrong with the bank. And to also make it very clear, the exit was a personal decision, not directed by RBI or even the board.
I think that's important because, for any business and especially for a bank, when something like this happens, the question is whether there's something wrong, whether there is more than what meets the eye, what are these differences, et cetera, et cetera. So this looks like, a conflict on a personal front, maybe in terms of how, on the work front, professional differences, et cetera, and not very much to do with what perhaps is happening with the business of the bank or on the regulatory front, et cetera. So it's a reassuring story, and for those who, of course, own HDFC Bank or watching with trepidation in terms of what happens today, I think this provides at the margin some comfort. We take a break. We're back with the pre-open, but we'll also, of course, be connecting with Sudarshan and Mitesh with technical trading ideas. Stay tuned.
Welcome back. Dipan Mehta, still in conversation with him. Dipan, we left the conversation that don't buy the private sector banks right now, even though you get a dip. Look for niche financial opportunities. So that brings me to Manappuram Finance, because RBI has given the final approval for Bain Capital. So now it'll be jointly controlled and the stake can go up to 41%. It's quite, significant for Manappuram Finance. One, Bain gets some nomination rights. There's capital which is going to come in. Is that a buying idea, an opportunity, according to you?
Yeah, certainly, Rima, I would look at it. But I think the key factor in Manappuram is, of course, it's attractively valued. But how they're going to execute the non-gold business, because that was the pain point for Manappuram. And now I'm sure the gold business also is doing pretty well for Manappuram. So certainly it's a company worth diving deeper into it, keeping it on your watch list, and then seeing if there's any change of management or anything, any specific on the ground changes are taking place to ensure at least that the lending practices, collection practices, NPA management on the non-gold side, how that is evolving, or whether the company is again pivoting back to more and more gold loans because they kind of lost out in terms of performance and returns as compared to Muthoot Finance. And Muthoot still remains our top pick within the gold loan companies. So I would look at it in positive light. And certainly it's a very good development from that point of view. And it will improve, of course, the credibility and the access to capital and maybe cheaper capital for Manappuram as well.
Okay, Dipan, we'll leave the conversation here. Thank you very much for joining in. Pre-opening rates are in, 530 points lower on the Nifty. Remember, markets had rallied nearly 3% in the last 3 trading sessions. So there is a give back today because Wall Street ended with a cut of 1.5%. The Dow closing at the lowest close of 2026. Oil prices have been on the boil, and then you've got bad news coming in on HDFC Bank. And generally, you overlay that with the macro jitters, perhaps you should prepare for a lot of red on the screen. So it's perfect time then to get in our technical experts, Sudarshan Sukhani, Mitesh Thakkar now joining in. Gentlemen, good morning. Perhaps not so good for the bulls. And plus, today is that sensex weekly expiry. Sudarshan, what would the approach to the Nifty be?
Yeah, good morning. Well, yesterday we said close all long positions which were taken on Monday and Tuesday, and that was a good decision because the long side has very limited potential. We stepped aside today. I think this dip that we are likely to see, this very enormous dip, is a buying opportunity. But you have to give very wide stops because the markets can test 22,950. So your stops are 22,900. If a trader is willing to take that stop, keep small positions, then this sharp correction may actually result in a buy. So consider buying only if you are willing to take a wide stop and trade only in small quantities.
So what would the stop loss be, Sudarshan?
I'm sorry?
What would the stop loss be if you buy at open?
22,900. That's the test of the previous low.
Mitesh, I remember yesterday you were saying that you would buy the Nifty only if it closes above 23,800. That didn't take place, and otherwise the advice was to exit some of the long positions. Now this morning there's going to be a gap down opening. What is the call?
I think, very clearly, my sense is that the markets on a medium-term, long-term pictures are slightly in a negative zone. What happened in the last 3 days was more of a pullback, and the first target was around 23,800, 820, which we kind of met but failed to sustain above. And then, if it would have closed above this, then maybe 24,200, 250. But we kind of, appear to be failing at the first level itself. A strong chance that we might actually go back to about 1,100, 150 zone, which is where the support pivot was before we had a good bounce back. So maybe a retest is on the cards. If it breaks below that, then we'll look at even continuation on the downside because, as I said, the bigger picture is still negative.
I don't know if you can pull up what's moving the Nifty, that graphic, right, which basically gives you an index point contribution to. I don't know if you can pull it up in the pre-open session. We are able to do it post 9:15, but if we are, we should just look at it because I think it'll give you a clear sense of how much of this pressure is coming in from just that one name, HDFC Bank. There you go. So, yeah, I mean, it's about 180 points, 180, and this was the pre-open, so let it settle. But this is in line with what the GIFT Nifty was showing. So, yeah, I mean, 3 minutes to go for the end of the pre-open session. So, this is not... the initial 60 seconds when things run wild, and the stock's showing a 10% downtick at this stage. We'll see. 758 on HDFC Bank right now. Sudarshan, what about you? I mean, you're just a view on HDFC Bank to kick this off?
Well, it's a buying opportunity. If you are an investor with at least a 1-year time horizon, these opportunities come very, very infrequently.
Okay. Mitesh, same question to you on HDFC Bank?
My view is slightly different over here. I was looking at the monthly, weekly, quarterly charts. I think 750 is an important average, and then you have about 715, 715. Maybe, the decline will get some arrest in that zone of 750, 720. But in case we start breaking below that and the indicators have broken down, that's why I'm slightly worried, then I think the stock might even correct further. So Yes, I think, people who want to look at a short-term trading point of view, around 750, 720 zone, if you see a reversal sign, a long is definitely feasible. But for the long term, I don't think this is a good stock. As of now, I think it's been underperforming the markets, plus the long-term charts are slightly on the weaker side.
All right, that's the call on HDFC Bank. Let's get in your own technical trading ideas for the day, Mitesh.
Yeah. I have a mix of buys and sell, and obviously with the markets showing this kind of a negative opening, the sell side calls are more, but I managed to find a buy call as well. So on the buying side, the sole call is Mazgaon Dock on a mild negative opening. Try to buy it around 2440, 2435 with a stop below 2400. Look for targets of 2525. The rest are on the sell side, and because of the gap down opening, you might have to worry about the risk reward equation and see what sells can be executed. But the first one is Apollo Hospital. Sell with a stop at 75.05 for targets below 7400. Bajaj Finserv is a sell with a stop at 1809 for targets of 1755. And Solar Industries, that's a sell with a stop at 13930 for targets of 13100.
So Mazgaon Docks is the only buy idea for Mitesh this morning. Sudarshan, yours?
Well, it's mainly buying. If there's a 500-point decline, you look for good quality stocks. JSW Energy is a buy. Now, the stop losses are irrelevant because they will be very different. But you traders have to identify that. But JSW Energy is a buy with an initial stop of 500. IEX is a buy with a stop under 120. Torrent Pharma is a buy with a stop under 42.50. And my only short is Titan, stop above 41.75. Understand, you have to adjust your stops.
Okay, gentlemen, we'll try and come back to you. For now, there is collateral damage on the rest of the private sector banks. So while HDFC Bank is the top loser in pre-open, Axis Bank, Kotak Mahindra Bank also down nearly 2.5%. And there will be some give back in IT after yesterday's big move. But HDFC Bank, clearly the top story today. Stock is down nearly 10%. Amit Tandon, MD of IAS, now joining in on the show. Amit, good morning. Last night we got rocked with the news about the resignation, the sudden abrupt resignation of Atanu Chakraborty. And he has said that statement once again will come up for you on your screen. He's observed over the last 2 years certain happenings and practices within the bank that are not in congruence with his personal values and ethics. He didn't elaborate on the practices, but the street is clearly worried, though sources have indicated to Ritu that this has not been initiated by the bank or the RBI, and there are no red flags or governance issues. But what was your reading of the statement?
Good morning. As you said, there's never a dull moment in the market. Something or the other keeps us engaged. Look, I'll begin with a disclosure that HDFC Bank owns 10% equity in IIAS. What that means is that they...
We'll just cut out. Apologies. I think Mr. Keki Mistry is speaking on that HDFC Bank investor call. Listen in.
Here, our biggest treasure that we all have collectively with the members of the board. Each of them are extreme professionals. And you, as a part-time chairman, is the trust and the integrity. I mean, that is a value system with which we have all grown up, and we've all been mentored in this wonderful umbrella of the brand HDFC, and we are proud of that. We'll continue to ensure that this particular trust is maintained not just now, but sustained for several years going forward. We will not do anything that will bring in ignominy. Of course, there will be a large organization, will have errors and omissions. We will continue to address them as we go along, but never will the tone of the top have anything which will have any kind of embarrassment to anyone, including our own conscience. Thank you so much.
With that, Renju, we can open up the lines for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. The first question comes from the line of Kunal Shah with Citigroup. Please go ahead.
Yeah, thanks for taking the question and doing the call at the short notice. Firstly, maybe you indicated that at least there are no material matter that bank is aware about or no specific happenings or operational issue. But maybe for such a strong wordings in the resignation letter, what do you think would have actually triggered that? Maybe that it's mentioned that it's not in congruence with his personal values and maybe ethics. So if you can highlight if there is something which would have triggered the friction which would have got created. And the second question is again, maybe it coincides the reappointment term of MD and CEO, which is now due in next 7 months. So how, since there are like board members also who are there on the call, maybe in terms of whether what would be the impact with respect to the MD and CEO reappointment and maybe the application which would be made to the RBI, any timeline which you can suggest in terms of how should we look through in terms of this development over next 2-3 months? Yeah.
So let me try and answer that question, and then maybe some of my colleagues on the board can also step in. Firstly, let me say that we are not, none of us as board members are aware of what are the specific issues which Mr. Chakrabarty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned.
Okay, and in terms of timeline, so maybe generally 6 months prior to the reappointment, we see it getting applied.
I'm sure the NRC will meet in the near future and take a call. But Shashi is very much part of the bank. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years.
Sure. Okay. Thanks. That answered the question. Yeah.
Thank you. Next question comes from the line of Kaitav Shah with Anand Rathi. Please go ahead.
Hello. So in terms of, hi, am I audible?
Yes, you are.
Yes. Good morning, sir. Thank you for having such a quick call. So in terms of timeline, there was an additional message that was received by the investors that you all received the resignation day before yesterday, and the board received.
It was
yesterday. And sir, so within that timeline, you were also approved by the RBI to become interim chairman. So that happened very quickly. If you can just tell us what happened within that timeline.
All right. So let me answer that. I'm right now in Delhi. I'm not in Bombay. I was in Delhi yesterday also. There was a board meeting in the evening. After the board meeting got over and Atanuji gave his resignation letter, some of the directors of the bank went and met RBI, spoke to them, and that is the time RBI approved. So it happened at very short notice. It did not come with a 1-day lag or a 2-day lag, as you may have indicated. The letter was received by the bank yesterday evening, and they met the RBI. They met RBI later on in the evening after the meeting was over.
Thank you, sir. The speed really helps. Thank you. That was the question.
Thank you. Next question comes from the line of Suresh Ganapathy with Macquarie. Please go ahead.
Yeah. So KK, was the issue with Mr. Chakrabarty there for a long period of time? You definitely would have minuted in all the board meetings the kind of disagreement that he would be having, because these things don't happen overnight, right, KK? So it's been a 2-3 year process perhaps. The press is quoting there is a power struggle and he wanted to operate on an executive style, again strictly going by what CNBC is saying. Has there been a long period point of differences over the course of last 3-4 years?
Well, differences on minor issues do come up from time to time, but there was nothing material whatsoever. Let me reassure you, in no board meeting has there been any kind of, complete differences of opinion or anything of that sort. And the board minutes will reflect that. Relationship, human beings are human beings. There will always be some relationship issue between individuals. Those kind of things happen. There was no power struggle in the bank, as you put it, Suresh. The bank works, the entire bank, the management team in the bank works as a cohesive unit, and to my mind will continue to work as a cohesive unit. When this thing happened yesterday evening, the first thing the board members did, people who were in Bombay, they met RBI, spoke to RBI. RBI gave their approval for making me interim chairman for a period of 3 months to just stabilize things and then move on. So that's the background. And differences of opinion and differences of views may always be there between individuals, but there was nothing, I repeat, nothing substantive, nothing whatsoever. And believe me, as I mentioned earlier, at the age of 71, I would not take on this responsibility for 3 months if the systems, processes, governance practices in the bank did not align with my principles and my level of integrity.
Thanks, Kiki. That is reassuring. Just one more thing. Of course, we talked about power struggle at the board. There
was no power struggle at the board. Absolutely nothing.
But what about power struggle at the employee level between the CEO or the DMD or the CXOs? Just again, that also comes in. Is this also functioning well?
No. Kiki, you can join, but I would like to address that question of young Suresh. Number one is, Kazad is a very dear colleague, and I have the highest regards and respects for him. We have worked together. Unfortunately, I do not know what kind of stories are going around, but today that man handles the entire business, the asset business of the balance sheet, which reflects the kind of respect and stature that he commands within the organization, both at the board level and at the management level as well. So that will continue. In fact, he will only get more responsibilities as we move forward. And the very fact that we were all unanimous, both at the board level, to send his name for yet another term as a deputy managing director reflects that. And we're extremely happy that the approvals have come, and he's going to be there for the next 3 years, which is going to be one of our best years in the history of the bank. Thank you.
Okay, that's clear. Kiki, you want to add something, or this is fine?
No, I would add to what Shashi said. There is complete, let me repeat, complete and absolute unity in the management team.
Sorry, just one last question I have to squeeze in. How are the regulators, you have in Delhi, you have of course met, how are the regulators, the government, the SEBI, the board, everybody is looking at this particular thing? Because you need to get the shoe-in of the regulators at this point in time, right? So can you give us a clarity on that matter?
I have not come to Delhi to meet anyone. I come on a personal visit with my wife, so I'm really on a holiday today. But so I've not met anyone in the government, and RBI, my colleagues on the board went and met them yesterday, and maybe someone may want to speak on that.
So there were 2 whole-time members and 2 independent members who had visited the regulator. The regulator heard us out. He obviously, was very supportive of the fact by his demonstration of approving Keki Mistri's appointment as an interim part-time chairman in the shortest possible time. That reflects, as Keki mentions, a very strong messaging to the world at large. And I think, they have been undertaking a lot of their supervision, in their supervision supervisory cycle, a lot of examinations, both off-site and on-site, which we have navigated right over the last 5 years in the recent past. And I think we have been whilst these examinations are not in the public domain, but I guess the fact that, we continue to remain in our positions says it all. Where there has been extreme amount of confidence to the respective independent committees, whether it's the audit committee, whether it's the risk policy committee, which are the fulcrum in terms of governance, controls, and of course we have the NRC committee. These are all manned and by independent directors with strong vintage, credibility, experience, and stature. And some of them are on this call, and they have, as I said, they have very comfortable with the functioning of these committees, who in turn oversees the operations in every aspect of it, whether it's risk management, whether it's compliance management, whether it's audit management, etc. Yes, any organization, whether small or big, will have issues, but these are all addressed at every point in time, and whatever is spending would have a lot of timelines, and these are the things that goes on in a very normal and a calm manner.
Okay, thank you.
Thank you. Next question comes from the line of Prashant Periwal with BlackRock. Please go ahead.
Hi, Sachin team. Look, so far, whatever I've heard on this call, it doesn't make me any wiser than I was an hour ago, right? So, we've not seen, chairmen in India resign and quoting that they did not like, what was going on. It's basically a very scratchy remark, right? People could resign because of personal reasons. Generally, that's what we see in India. So there is something. Would you kind of open up and, try and build some confidence with your investors? Like, what exactly was it? Because he was the chairman of the bank. I mean, he was not like any other employee that resigned, saying something and means nothing.
Yeah. Well, let's get... that's the call, by the way, and I think it's a pretty strong, united front that HDFC Bank management is presenting to the markets. And important that this was arranged at 9 o'clock in the morning, right before markets open. And you can see the impact. The pre-open initially showed a 10% downtick on the stock. And I think it's basically recovered the entirety of it, 5 or 6% lower. We reported shortly after 8 in the morning that this perhaps is the result, the resignation perhaps is the result of internal differences between Mr. Chakrabarty, who stepped away, and others. And that Mr. Chakrabarty, according to sources, of course, there was sort of trying to function in an executive way while he was in a non-executive position. So it was those things that nothing to do with regulatory or how the bank is lending or the actual core business of it. So analysts like Suresh Ganapathy of Macquarie quoting that CNBC story in that interaction with Mr. Keki Mistry and Mr. Jagdishan as well. The call is on. We'll put out any more highlights, details, etc., which is said in the call on the screen as we go along. We've kept Neelkanth Mishra waiting for a while. He's head of global research at Axis Capital and chief economist at Axis Bank. Neelkanth, good morning and apologies, but we had the HDFC Bank story.
No, this is very important.
And thank you for joining us once again. So just the, it's everything is every day, or not every day, but maybe a couple of weeks, something new comes up, which seems equally urgent, pressing, world-changing. And now this is the Iran thing, right? Neelkanth, what is your sense? I mean, doesn't look like there is an end in sight. At a macro level, top-down level, how important is this for India?
Well, this is very important. Whenever in the last decade I've been asked what is, when I share my bullishness on India with investors, global investors in particular, when I'm asked, what do you think are the risks? And I say, we import nearly 50% of our dense energy, and that's a big risk. And so that vulnerability does get exposed at these times. So if oil prices stay elevated, we lose significant amounts of growth. It's a one-time impact. We see some inflation effect, which is a one-time impact, and potentially the need for a currency adjustment. So this is a very important development. But at the same time, I don't expect it to last long. Now, which is what I think the market expects, the oil market expect, everyone is, even companies. In fact, companies are thinking that, we have 2-3 weeks of inventory, but I think it'll end before that. The concern I have is that we are now, perhaps it will end only when the market panics. So it's one of those catch-22 kind of scenarios where the two parties that are affected, one party is, of course, taking out leadership, is reducing the capability to make ballistic missiles and all that. But the other side is saying that, look, for us, it is about survival. So we have enough to survive, and that we will keep the Strait of Hormuz blocked. And remember that 7% of world energy supply is blocked. If this lasts more than 4 weeks, 4 more weeks, I think the risk of a significant global recession is quite meaningful. So that's the call, right? So how long can the regime persist? The other side is now starting to escalate. So you must have seen that some gas fields were hit yesterday. The risk that in the accident or in the retaliation, some mistakes are made. In many of these battles, thousands of aircraft are flying. There are so many missiles being shot at. There could be some error with the map. There could be some AI generated error, and mistakes can be made. So I think those risks are high. And therefore, the invading parties may only pull back if they see pressure from the financial markets. So if this does not end by mid of April, I think the markets will start to panic, and that's when perhaps the end of the war will be visible. So I don't expect this to last 1 year either way.
But you did say if it lasts more than 4 weeks, correct me if I'm wrong, if it lasts more than 4 weeks, perhaps a global recession is likely.
Yes,
okay.
Because
this is we are wrapping up the third week, Nilkan, now, right? So you're basically saying one more.
No. 4 weeks from now, so mid-April.
4 weeks from now. Okay.
The point is, you see, we have taken out 7% of world energy supply. So 32-33% of world energy supply is crude oil, and 20% of that is stuck. The 25%, 24% of world energy supply is natural gas. 2.5% of that is stuck. It flows through the Strait of Hormuz. And so if you do 32 into 20, which is 6.4, plus 2.5 into 24, which is 0.6, that's like 7% of world energy supply, which is stuck. This is the one-on-one. So you will have efficiency gains, you'll have substitution effects, like India has substituted to some extent the gas that was sent in or used in power plants, shut that down, and of course switching to coal. Other countries will be doing the same. Some have reduced the less economically important parts of their economies. So maybe 1 or 2% can be offset, but 4 to 5% of impact on world GDP in this last 1 year is I think. And remember that there are second-order effects showing up. So we now have real estate companies wanting to write to RERA that projects are going to get delayed because tile supply is stuck. There are retail companies which are slowing down their store expansions because tiles are not available. There are auto component companies which are struggling to get carbon black. There are issues with LNG supply in certain parts of auto manufacturing which can actually start affecting auto production. So the second order effects of this, and remember there's going to be global impact of this. We saw in the newspapers today that some workers are exiting Surat, the textile plants, because they can't get LPG cylinders. So the second order effects can be quite. Now, the reason why I think everyone, including companies and markets and investors, are reluctant to sell, and frankly, from 1 year perspective, that is the right thing to do at this stage. But these inventories don't last forever. And I think these supply chain disruptions will get really extreme with every passing day. And at some point, I think the markets are likely to panic. And when they panic, I think everyone who's thinking that when they panic and the market panics and it falls, I will go and buy, will actually be questioning. It will have to get to that level of intensity. And that's when I think the invading parties start to pull back. So that's the likely outcome. Either way, this cannot last 1 year because it's going to be too painful for everyone from US to China, all the parties that are involved.
So if it lasts for 4 weeks from here on, mid of April, what, according to you, will be the impact on global GDP and India's macros, Neelkant? And in that context, yesterday there was a lot of discussion on what benchmark we should use, whether we should use Brent crude prices or whether we should use India's crude oil basket, where the levels are much higher, $140, $145 per barrel.
While those are interesting discussions, I think that the impact is way more significant. So it is look at oil prices. See, normally, commodity pricing, everyone is used to doing cost plus kind of analysis, right? So you put a cost curve, say that zinc, the 96th percentile of producer is at, say, $2,400, or I don't know what that number is today. And therefore, zinc is going to be at 2,400. I've heard people saying that, look, oil storage costs have gone up. So now every week or every month, this is the dollars per barrel that rise. I don't think that is how oil will be priced now. Oil, now the pricing has to destroy demand. So if, say, 5% of world energy supply is gone, and if you look at it in crude oil terms, nearly 40% of traded oil is gone, you need to destroy that demand or reduce that demand. And therefore, so the prices keep going up till some buyers say that, at this price, I can't buy. So we are seeing that some of the weaker countries are, their fertilizer access has gone. They're reducing transportation. In some places, ATF is in shortage. So those things will start to happen. Whatever the price is today, I think the fact that there is a physical shortage of energy. So if there's a 4 to 5% net energy supply problem, there is a 4 to 5% of world GDP which is at risk. So it's as simple as that. Now, the reason why no one is feeling that right now is that there are inventories in the system. There is anticipation that we shouldn't panic, we shouldn't sort of upset our customers. But as the dates pass and the panic starts to set in, as inventories start running out, is when I think the markets start to really worry. Now, we should only hope that in the urgency to close the conflict, that mistakes are not made. Meaning that just like that unfortunate incident of the girls' school in the first wave of attacks, if the maps are not updated, or if there is an attempt to take out, say, some senior person, and in the process some energy facility is hit, and in retaliation, Iran ends up hurting the energy production facilities, which then take 1 year to go up. I think then the market panic becomes quite severe, and perhaps that is what is needed for a proper negotiation to happen, because I think the strategic intent of regime change, which was stated very early in the conflict, it is clearly proving to be much harder to do. So one side is trying to survive long enough that the markets can get under pressure. The other side wants to end it before the markets come under pressure. The one outcome I see here is that markets come under pressure is the important signal for this conflict to end.
Nilkant, it's quite crazy, right? The way this is being fought. I mean, taking out leaders. I mean, it's in a way unprecedented, the way it's being fought as well. But so many things are now, they seem unprecedented. I mean, straight away taking out the leadership, top leadership, and we didn't see that kind of stuff, right? So
yeah, and it sets a very bad precedent. So if you see like the Pakistani attack on the Kabul hospital, and 400 people died, it's like there are no more rules, no respect of boundaries, borders, and so anyway. But see, the statement that you started with, that every couple of weeks you see some challenge like this. Look, this is a 15-20 year readjustment which the world is likely to have to go through. And we're not, the one thing we haven't discussed, and perhaps this is not the right forum right now, is AI, the impact of AI on economies and supply chains and all that. But the readjustment that the Chinese consume too little, produce too much, that the dollar is too strong, the fact that this seems to be an attempt by the US to, if you think about the Panama Canal, the Venezuela change, the Cuba change, now the Strait of Hormuz, perhaps other straits which are, or maybe even Djibouti and the Houthi rebels. So the effect on trying to control the choke points, the global supply chain choke points. These are all parts of a much longer strategic battle, strategic war, and
which is going to continue
so
as
these are occurrences because of that. Yeah, sorry.
Just a quick 30-second response, Neelkan. Will FIIs make a comeback? What will it take? And two, around 23,000 levels, are we at near fair value?
I do think so. But remember, as I said, it will be market pressure which will bring an end to this battle. So it's very hard to say if this is it. And whether the end of the battle will also mean, remember, there's a non-linear impact on energy prices over the next 1 year. So a 4-week battle will mean that 3 months, it could take 3 months for oil prices to normalize. If it lasts 4 weeks more, it could take 6 months for oil prices to normalize. So there is a very non-linear impact on energy prices. And so how long this goes, how far it goes, we don't know. The moment the war ends and oil prices start falling, there's a lot of inventory that will come into the market. I think that will be a big relief, and that would bring the FIIs back. But frankly, those are not the signals which are currently very important. I think what we have to see is what kind of market pressure is necessary for the two warring parties to come to a settlement. And remember, China is also party to this, meaning that when the US-China summit is postponed, it is clearly the US trying to tell China that, look, we need you to act on this. And so both sides, I think, will perhaps are waiting for the economic stress to get to a point where a consensus is forged. And that may not be very, very friendly to markets.
Yeah, and I think Iran, of course, is this half jokingly, but I think maybe it's true that while Israel and the US are fighting actual battle with, and actually both are fighting actual battles, but fighting Iran is fighting the S&P 500. Right? I mean, I think they've realized that that's the leverage that they have. Disrupt markets enough, markets panic, and then there is that reflection.
And this is, Prashant, just 10, 15 more seconds. This is how the modern wars are fought. There's a nice book written by two Chinese colonels in 1999, which talks about this, that if the opponent is too strong, try to find a weak spot and then latch onto it. And wars are no longer going to be only fought on battlefronts with missiles and soldiers. Yeah. It could be fought in financial markets, in trade wars. And I think those things are now clearly becoming obvious.
All right, Neelkan, thanks very much. Good conversation. And we will get you back on with the AI bit, right? That's a whole other conversation which we will address. Thank you for joining us. Nigel, you want to come?
Well, just one quick point on HDFC Bank. The low that they made today was around 770 rupees. I was looking at the value of subsidies. If you look at the forward basis, it'll be close to around 120 to around 140. Take it at around 130 rupees. So if you say that in the stock at around 800 rupees, deduct around 130 rupees or thereabouts, it comes to around 670 rupees for the core business. And I was looking at the forward book value. Most estimates are in the vicinity of around 440 rupees to around 450 rupees. Hence, on a standalone basis, HDFC Bank will be available at sub 1.5 times, which is the cheapest we have seen in many, many years. So for the time being, you're seeing a sharp drawdown on the stock. The low of today is around 770 rupees. It appears the near-term headwind is there with regard to the news flow, but valuations are actually the lowest we have seen in multiple years. I think it's even lower than the COVID multiple of around 1.6, 1.7 times or thereabouts. Just wanted to put that out. Value of the subsidy is around 130 rupees. Book value at around 450 rupees, so around 1.5 times.
And that's the point I made in the morning. 1.7, cheapest in 20 years. Yeah. But we didn't know the clarification at that point. Now add that valuation bit to the clarification that there is no actual issue in terms of how the bank is run, lending, etc. Yeah. The core business, I mean, this is basically internal differences. People couldn't get along or whatever. So then, I mean, I think, if you take that and combine both those, I'm not saying that this is the time to buy, but in terms of thinking about downsides, I mean, I think there isn't very much, and I think the market's reflecting that. Already about 5% off the lows of the day at about 800 plus.
Yeah, a point to buy, we don't know, but maybe it's not the time to sell. Exactly. Probably.
Exactly.
Yeah. And not to forget that Asia is weak today. So the Japanese index has extended the loss and is down nearly 4%. The Korean markets are down 2.5%. Taiwan is down over 1%, 1.2% cut coming through. on the Taiwanese market. And there you have, Hang Seng is down 1.8%, and HDFC Bank is a stock where the FII holding stands at 47-48%. So if there is a flight of capital away from the FIs, if the FIs are selling, then HDFC Bank comes under fire, news or no news. But let's invite the management of CEAT on the show now. Arnab Banerjee, MD and CEO of CEAT, is now joining in. And some of the discussion points that we'd like to talk with Mr. Banerjee are up for you on your screen. Mr. Banerjee, let me begin first with the raw material. What has been the spike in your raw material components in Q4 as things stand today? And how much of that are you planning to pass on?
Right. So in the first 2 months of Q4 itself, there have been some increases over Q3, especially the synthetic rubber side. It went up by about 8 to 10%. Even natural rubber went up by 8 to 10%. And in March, we are witnessing a further spike over the Jan-Feb level by about 8 to 10% further. So significant spike. But in the pass-through, there will be less impact in Q4 over Q3. So our raw material price in Q4, which will hit the P&L, will be much lower. It will be slightly higher than Q3, but the major impact will come in Q1. Having said that, the price increase actions have already started. We have increased prices in aftermarket by about 1% and plan to increase further within March as well as through the month of April. OEM prices are indexed, so they will go up as on 1st April by about 2.5-3%. And we have announced price hikes in international markets as well for about 3 to 5%. Again, there's an order book, so the pass-through will take some time through the month of April and into the month of May.
Okay. What's been the aggregate increase in the raw material basket as of now, January to March?
January to March, the felt increase will be less than the actual increase in terms of buying raw material because of inventories and pass-through. So we will be slightly higher than Q3, but not significantly higher than Q3 in Q4.
Okay. Would you like to put a number? And therefore, what happens to margins? Your gross margins in Q3 were 40%. I think EBITDA margins was about 13.5%.
Yes, in terms of gross margin, the slight impact of raw material that we have in Q4 will impact gross margin to that extent, but it will be minimal. As I said, the impact will be felt much more acutely in Q1, and hence we have started acting on the price increase to mitigate that impact.
From April 1st, prices go up by how much? You all will try to put it, I think, in a staggered manner, right? Push up prices.
Right. So our intention is overall replacement should be 2 to 3%. Starting March, 1% is already taken. And the balance will be taken by the end of March or through the month of April. So that is replacement. OEMs are index pricing, so it should go up as on 1st of April. Again, we expect around 2.5-3%. The international business is where we have an order book position, so pass-through will be slightly delayed. But we expect around 3% to 5% over April, May, June.
All right. And typically your inventory that you hold is for how long, sir?
Finished good?
Yes. No, your raw material inventory, because that will, you'll get hit with the lag. So I ask.
Yeah. Exactly. So raw material inventory is very, we are now holding very low inventories for domestic raw materials, but international raw material, domestic will be just about double digit in terms of number of days. International raw material is higher. So overall weighted average would be close to 25-30 days.
Okay. All right. Mr. Banerjee, also I wanted to ask you with regard to exports. I think exports as a percentage of your mix is close to around 18 to around 20% or thereabouts. Have you seen any kind of problem with regard to container availability, the routes as well? Is there some inventory stuck at various ports? And if you could clarify on Middle East exposure, I believe it's relatively smaller, but run us through that number as well. Total exports, how much is the Middle East?
Yeah, so Middle East export is completely stopped as of now. So there is no cargo going to Middle East at all. Middle East has been increasingly diminishing in terms of saliency, about less than 20% of our overall international basket. But fortunately, we have had good order books in the other parts of the world. So we have been able to divert production and to those other markets because of healthy order book. And our impact on international business sales will be very minimal in the month of March. But going forward, if Middle East stays suspended, we have to ensure and we are doing that to keep the order base healthy for Europe, LATAM, and the US and Southeast Asia, so that we can manage our sales volumes accordingly. But Middle East sales is currently absolutely zero.
And exports to the Middle East as a percentage of revenue would be?
Is less than 20%.
That's the overall exports. Just purely Middle East where sales are suspended?
Yeah, Middle East versus overall export is 20%. Overall export is 20% of sales.
4% of the total mix.
Yes.
Okay, all right. And the point you wanted to clarify with regard to availability of containers and logistical issues for the remainder of the exports, ex of Middle East?
Yeah, container availability is increasingly going to be a concern. We are managing somehow now, but gradually the availability issues are raising its head. And freight charges have gone up. So we have increased the freight surcharge recovery from our customers. So that is how we are going to mitigate that. On the raw material side also, the freight has almost doubled. So freight is going up, which we are trying to mitigate from the customer side. And container availability, I think, increasingly will be an issue, which could be a disruption going forward.
Okay. On account of the LPG shortage, has production been impacted for you or any of your vendors?
Well, for us, the effect has not been great because we have had alternate fuel arrangements wherever the impact could have been there. So production goes on unabated as of now. There are some small impacts. For example, in our canteens where LPG is used, it could be a problem going forward. So we have to make arrangements, alternate arrangements for food for employees. For our vendors, yes, gas is a critical ingredient to maintaining their production lines. So far, we have visibility up to inventories, for our inventories, raw material inventories of April and May. Business continuity is very important. So we are ensuring the availability of raw material, which we can see more or less up to April and May, there's no issue. But increasingly, yes, disruptions in supplies and increase in price is expected if the war doesn't stop right now.
Right. Just very quickly, Mr. Banerjee, you would have an idea about what's happening in the auto component ecosystem, right? I mean, it's usually the weakest guy which breaks the link, and then it's an effect which is felt across the ecosystem. Is that starting to happen? We had Neelkant who was talking about second-order effects earlier, right? Is that happening? That kind of disruption? I'm not talking about your business, but in the auto ecosystem.
Not yet felt because of inventories by the players and the second level, the tier 1, tier 2 suppliers. But it is imminent if the war prolongs. Then those second order disruptions are likely to happen. So everybody is scrambling for business continuity at this point of time, visibility of raw material stock. We also are doing it. We are caught between this as well as the probability that the war will probably stop and sanity will prevail. In that case, we also don't want to get stuck up with very high inventory at very high prices. Yeah. So essentially, the strategy around and with CEAT is to buy for production. And we are buying in lots of every 10-15 days. And in future, those disruptions will become more real if the war prolongs.
Yeah, absolutely. And hopefully this does not lead to actual demand destruction. And we'll see. Mr. Banerjee, thank you very much for joining us. Good speaking with you and appreciate your time here on CNBC-TV18. We'll take a break. Nazara Tech will be joining us on the big acquisition that they've made. The announcement came yesterday. Stay tuned, coming up. Welcome back. Markets looking pretty bad, right? 2.33% lower as things stand. We have the Nazara management with us. Now, Nazara, the UK arm of Nazara, will initially acquire a 50% stake in Blue Tile and Best Play for 918 crore rupees. The remaining 50%, is going to be acquired by 2028 at a valuation based on 6.6 times trailing calendar year EBITDA. So let's just get the transaction structure out. It's a big one for Nazara. Nazara, of course, has done many acquisitions over the last few years. And but this, in terms just the sheer size of it, this is a pretty large one. Nitish Mitterson is joint MD and CEO of the company. Is with us. Nitish, good morning. Great to have you with us here. And I dare say congratulations. It's a large one and it's overseas. And that is immediately, you know, the worry is such large capital allocation outside the country. You know, is it advisable? How's it going to work out? Etc. etc. But we'll get to that in just a bit. Tell us a little bit about the transaction structure itself. In total, what are you going to be paying?
So the transaction is, you know, of the acquisition of Blue Tile Games and Best Play Games. They're two sister companies that Nazara UK has acquired. Nazara UK is a 100% subsidiary of the parent entity here in India. So the transaction is really structured in a three-way manner. We do a 50% up purchase upfront, where we get controlling stake, for which we pay about $101 million. Then, as you mentioned, in 27-28, we buy the balance 50% at a 6.6x of EBITDA in the trailing year. To set a perspective, their revenues were USD 153 million for 2025 with a EBITDA of about 28 million USD, and it's been a fast-growing company. What's really important in this particular opportunity is that the team is a very high-quality team. The founder is an ex-Google founder, and they come from most of the leading gaming companies, global gaming companies. So retaining this team, especially because they're doing excellent work in the space of AI related development of gaming, is very important for us, because it's not just that they will continue to leverage AI for their growth, but we can use a lot of their technology and knowledge base to also significantly accelerate the adoption of AI in the rest of our businesses. So I think retention of the team was very important. So we also have earnouts that start in 2028 all the way to 2030, which would be, in our estimate, a most probable estimate of about $90 to $100 million, $94 million to be precise. So I think that's the structure of the deal. The good news is that the company is...
Right. And Nitish, if I can come in, sorry, the earnouts mean exactly what? You will pay, provided the operating team reaches certain thresholds.
Yeah, think of earnouts as incentives or whatever you call it. It's really, we will pay on an annual basis based on them meeting certain projections that have been baked in today on forward numbers. So it's performance linked, and the whole deal is structured in a way that is, Nazara gets significantly de-risked, and only if the team really performs well.
So the total size is what, including these earnouts and everything? If they achieve these targets, for you to own 100%, what's the total value that you'll be paying?
So, because there are many variables, there's going to be a range of it. But if I were to call a most probable range, it would be in a $300 to $350 million, including the earnouts, payable till 2030. And a lot of the earnouts, etc., will be paid out from the cash generated in the company, in the target companies.
So this is, you have to pay this, say, $350 million, including earnouts, right?
Yeah. Yes.
By March of 2030.
June of 2030.
June of 2030, this has to be paid out.
Yeah.
And this 100 goes out now, and the rest of the 250 is, some portion goes out every year.
That's right. But the first payout will probably, after this, happen in 2027. Yeah, so next year.
And how is this being funded, Nitish? Give us a sense of that.
Yeah. So the initial payment will be, the initial 100 million is also broken into two components. It's $60 million on closing, which should happen in the next 2 or 3 months. And the balance 40 million after 6 months from closing. Significant portion of the upfront will be funded through our own existing capital. The remaining could be paid up to 25% in Nazara equity. Also the cash generated from the target companies. And especially any additional fundraisers or debt that we may do to structure the financing over a period of time.
So you will perhaps need additional equity or debt fundraise to fund this?
At some point of time, yes.
At some point. How soon do you think? Because the payout is till June 2030. When do you think you will need to tap the external funding route?
Yeah, I think our funding is not usually, dependent or focused on just one transaction. As you know, we are active in the M&A space. And I think this particular deal, because this is puts us really on the global gaming backdrop in terms of the scale that we have done, and it's putting a lot of other opportunities on the table. So we will see the opportunities as they come and fund the company as required. But we are very confident that any funding that we do, any dilution that we do, is going to be extremely accretive from a per share cash basis.
And will these acquired companies, Nitish, also in turn own stake in Nazara Tech?
It depends. If we issue equity, like I said, in this particular transaction, the second payment onwards, we can issue up to 25% in Nazara equity. So depending on what we do, they could hold some stakes in the
So 100 million, say 60, you said 60 goes out now. So 60 million goes out now.
Yes.
And 25% of the remaining 40 million can be paid through stock.
No, the first 100 million is all cash.
All cash.
The second payment would be, when we buy the next 50%. And the earnouts after that. Those would be up to 25% in equity.
Okay, so can you put numbers to it?
Yes, sure. I think the FY27, FY28 purchase of the additional 50% would probably be in a range of 120 to 140 million. And 25% of that would be paid in Nazara equity. Like I said earlier, the earnouts which are due between 2028 to 2030 would be in the 100 million range, again of which 25% could be in it.
So, so basically about $35 million could be paid out in
Nazara equity.
In Nazara equity.
But over the next few years, I think it's important to understand that.
By FY28, you said, right? By the next tranche has to be paid out by $150 million to be paid out by FY28. Right. And out of that, 25% can be paid in Nazara equity.
Yes.
Yeah. And just what is the total amount of fundraise you will have to do for this cumulatively over this period?
We haven't, at this point of time, calculated from a fundraise perspective, because again, important to understand Nazara's existing business is also generating cash. And we will, obviously, our attempt will be to fund as much as we can internally and not go for fundraise.
On the outside, Nitish, I mean, I'm sure you would have worked out the financing. So just give us on the outside, what is it?
Maybe over a period of time, I would say, 1,000, 2,000 crores kind of number.
1,000, 2,000. Is it 1,000 or 2,000?
Like I said, it's a wide range because we are doing many other activities. We are not only doing this particular thing. We are funding our existing businesses. So it's difficult to put a very sharp number on it. Right?
But closer to 2,000 crores in fundraise?
But not, again, just to clarify, not at this point of time.
Yeah, I know. Yeah, over the next few years, because this has to be paid out by FY30.
Yeah, but again, look, I don't want to put a specific guidance here because it's possible that next year we may have like I said, this is a stepping stone for us, for Nazara to become a global gaming giant out of India. And it's possible that next year we may have even a larger opportunity or a more attractive opportunity. And therefore, I really don't want to guide the market saying I may raise only 2,000 or 1,000 or 500. We'll see how we'll do what is right for the company.
Okay. So you've told us the acquired companies, both of them, have a combined revenue of $153 million with an EBITDA of $28 million. What else does it bring to the table? Because it opens up the whole avenue of casual gaming for you.
I think 22 million monthly active users currently. Total downloads of these 17 games, about 375, touching 400 million till now. About 10 million installs a month. But more importantly, they have a very unique proprietary platform called Best Play, which is really an internal user acquisition, discovery and monetization engine. And I think that can be very, very useful for the existing Nazara businesses and also has a lot of scale opportunity. The other really important thing in this particular one is the use of AI. All of us have been talking about how AI can negatively disrupt industries. But I think in the gaming space, if we adopt AI very actively, there can be a very strong tailwind coming from AI, both in terms of revenue growth and margin expansion. And this particular team and company has been using AI very effectively And we're hopeful that we will also adopt that at the Nazara level across our different businesses through this acquisition.
Okay, got that. And these acquired companies also generate cash? Because you also said that you will use the cash generated by the two companies to fund the acquisition.
Of course, they are highly cash-generating businesses.
So this will be EPS accretive from year one?
I'm not sure about EPS at this point of time because we're working with our auditors to see how the amortization of intangibles would really play out. But it would be highly EBITDA accretive, and it would highly be, if you were to look at it from a cash generated per share, it would be highly accretive.
Okay. Do you have numbers of what the consolidated entity, because you will be acquiring a controlling stake, what would Nazara's numbers look like for, say, next year?
Yeah, if you look at our 9 months numbers for this year, we did 1,431 crores of revenue and 177 crores of EBITDA. I wouldn't be able to share the Q4 numbers yet, we're still in Q4. But you can extrapolate to see that this company that we're acquiring is almost as large as our existing business. So at the least, we should be doubling next year. And with organic growth of both businesses, hopefully more than that.
Okay, one final question, Nitesh. Does this signal that Nazara is ready for bigger acquisitions? You've made many acquisitions in the past, but this appears to be one of the bigger ones, going up to $350 million in terms of a total payout.
As I've shared a couple of points earlier, one, we decided about 18 months back to refocus strategically on the core gaming business, which is why also certain things that we did, like deconsolidation of our esports business, etc. So we're sharpening the focus of the company significantly. We see this as our biggest opportunity to really create a global gaming giant out of India. And the last 7-8 years of M&A activity, working with a diverse company, not only in India but outside, has also given us confidence to be able to take bigger steps. Yes.
Yeah. Got it. We'll just, we'll leave it on that note. Thank you very much for joining us. Appreciate your time here, and wish you all the best of luck. We'll sort of, keep chatting as you continue to sort of close this acquisition and continue to execute. We'll take a break. We're back on the other side. Vinay Rajani of HDFC Securities on the other side. Do a quick technical check on things. The market fell down heavily.
Welcome back. It's a dismal looking screen. It's more than 500 points down on the Nifty. It's 23,250. The immediate line of support from here on will be Monday's intraday low of 22,950. So we've still got about 300 points to go from that. But for now, the Nifty is down close to about 530 points. Vinay Rajani, HDFC Securities, is now joining in on the show. Vinay, thanks for joining in. What are you all doing? Down 500 points at open. Any trade?
Yeah, good morning. So after 900 points recovery from the lower level, Nifty has resumed the downtrend. And as you rightly said, that it is very important that Nifty should hold above the 22,955, the Monday's low, because breaching of that will resume the downward momentum and we can even see a further lower level. So technically, primary trend has been bearish. Now it is all we need to see is that whether it is protecting this 22,955 level or not. But as far as breadth of the market is concerned, that is also suggesting that weakness could continue because the percentage of stocks above 200 DMA in NSE 500 are still at 28%. So in the history, we've seen that this number nearly bottoms around 10 to 13% reading. So this number is still at 28%. This suggests me that the weakness in the broader market and overall sentiment of the market will remain bearish. Though we have to see the Nifty. So Nifty, we are asking traders to, those who are holding, can keep a tight stop loss at 22,955. And the recent resistance, the yesterday's high will act as a strong resistance. So primary trend is bearish and one should remain cautious in the market. That's what we feel at this point of time.
Stocks, Vinay?
Yes. So we have seen some breakdown, short-term breakdown on the silver as a commodity, and that can be seen the weakness can be seen in the Hindustan Zinc. Also, the metal yesterday fell in the global market. So Hindustan Zinc has given a fresh breakout on the charts, and yesterday there was a short build-up also in the derivative side. So we feel that Hindustan Zinc March future can be shorted here around 521. I would suggest a stop loss at 531. On the downside, I'm expecting a target of 500. The second stock I would pick from the real estate space, which is clearly struggling in this particular scenario. So Lodha is looking weak on the chart. So Lodha March future can be shorted around 830. Stop loss can be kept at 848. On the downside, I'm expecting a target of 805.
Got it. All right, Vinay, thanks a lot for joining in and giving us all of those details. For the time being, the markets are under pressure and the Nifty Bank is getting absolutely slammed, down more than 1,000 points. And the key reason is HDFC Bank. So let's revisit that story. Ritu joins us to run us through details on that story, what was said in the con call, and a brief check in terms of valuations. Ritu, take it away.
Good morning. Thanks for that, Nigel. To briefly recap for our viewers, Atanu Chakravarti resigning as chairman of HDFC Bank, and our sources indicated that this resignation was very much a personal matter. To clarify yet again, it was not linked to the conduct of the bank or any kind of regulatory or governance issues whatsoever. In fact, top sources indicate to us that the regulator does continue to have comfort with the functioning of HDFC Bank. There are no red flags on NPAs or governance or anything of that sort. Our understanding is that the resignation stemmed from the friction between Atanu Chakravarti as the chairman, working in a very executive style in his non-executive position as a part-time chairman. And that's something that has been a cause of friction for many years, culminating now in this resignation. That said, the exit was neither RBI directed nor board directed. It was very much a personal issue. And as we have been reporting, and this is something that was confirmed in the con call that was just held, the board repeatedly asked Mr. Atanu Chakravarti in last night's meeting the reason for his resignation and specific governance issues, but he said there was no regulatory matter to highlight. It was that his values did not align with that of the bank. Now, in the con call itself, you had the chairman who is now taken over, KK Mistry, for a 3-month term, during this transition period, reiterating that there is no material impact to disclose. There is no specific practice or issue that has yet been brought to the board's attention. For Mr. Atanu Chakravarti to resign in this manner. He maintained that the board has oversight. It is fully operational. The strategic direction, business priorities, they do not change at all. And repeatedly reiterating Mr. KK Mistry that at the age of 71, he would not have taken on this role if the bank's governance did not align with his own values and integrity. Sort of again pointing out to some of the comments that have been made by Atanu Chakravarti in his resignation letter, with KK Mistry even going on to say that there is no embarrassment to anyone's conscience. Their conscience is clear. And he also said no board member was aware of any specific issues that Mr. Chakravarti cited in his letter. In fact, he said some of the board members met with RBI yesterday, and that RBI has so far been very supportive of the bank. They're very, fully involved in the picture, and their comfort is reflected in the fact that they immediately approved KK Mistry's appointment at such a short notice. Again, KK Mistry highlighted that perhaps there were differences between Atanu Chakravarti's thinking and the bank's own thinking. And there was nothing beyond that. Now, the other point of contention that was, called on by some of the analysts was that the CEO, Shashi Jagdishan's own term, the current term is set to end in October, and whether the bank is looking at extending that, to which KK Mistry very clearly said they back Shashidhar Jagdishan and the kind of work he's done, and at the appropriate time, the NRC will take up this matter and put it forward before the RBI, with Shashidhar Jagdishan also chipping in that the best for the bank is yet to come.
Thank you very much for that. Sonal now joins in for more on oil and gas.
Well, that's a big developing story and has had impact on the entire market. The big news, of course, is that Iran has issued an evacuation warning to all facilities across the Gulf, especially UAE, Saudi Arabia and Qatar as well. And there have been some missiles which have hit a critical gas infrastructure in Qatar, in Iran as well, which has basically disrupted gas supplies, or would possibly disrupt gas supplies globally as well, because that would be one of the biggest gas facilities in the Middle East and West Asia as well. well. Now, that is one of the reasons why there's a fear that there could be more inflation in terms of gas prices. Already, oil prices have hit that level of $119 a barrel. Now, UAE also has shut gas facilities on the back of that. We are talking about higher crude oil prices, higher gas prices. And, even if the Strait of Hormuz opens now, because critical gas infrastructure has been hit, it will take time to bring back production. So we could look for weeks of supply disruption despite cargoes running because of higher costs and no production happening in those facilities.
Okay, all right. We'll take a quick commercial break here. On the other side, we have the management of JK Lakshmi Cement joining us to discuss the West Asia war impact and, of course, demand trends for the sector. Stay tuned.
Welcome back. As promised, let's get chatting with the management of JK Lakshmi Cement. We have with us Mr. Arun Shukla, the President and Director of the company. Hi, Mr. Shukla. Good morning and good to see you in. The key focal points that we're going to be looking at are flashing for our viewers on the screen. Demand, pricing, how much of inventory are they sitting on? Well, Mr. Shukla, let's get straight to the point then. Could you tell us, the raw material cost spike that we have seen? I understand that both petcoke as well as coal prices have moved up. So first, what is your mix, your raw material mix between petcoke, domestic coal and imported petcoke or coal? Please go ahead.
So good morning and thanks for having me here today morning. In our case, in North and West, we have about 50% of petcoke and coal ratio. And in East, majorly we are using indigenous coal, which is, Indian coal, and some small portion of petcoke. So East, I think we do not have, much of an impact. But yeah, North, we are dependent on imported coal and petcoke. But we do have flexibility of, kind of changing the fuel mix, like more of a coal than petcoke. So we are trying to manage that. So yes, I think, I suppose this is a temporary phenomena which is going to get set right as we move forward. But yes, this is one thing which is definitely, I think, is going to increase our cost in coming quarters.
All right. So, but you'll have some inventory, right? Particularly with regard to the imported coal as well as the petcoke for your northern operations. So the negative impact of the spike that we have seen in input cost, that starts flowing in the second half of the first quarter. Would that be a fair estimate?
Absolutely. You are absolutely right. Yeah.
All right. And also, since you said your East operations basically are using domestic coal, have you seen a bit of a spike up in e-auction coal, or do you all get linkage coal?
No, we have linkage coal long-term, fuel supply agreement. So we are not being impacted now.
Got it. The other point is that packaging cost as well has reportedly gone up. So for a company like yours, have you experienced that kind of a spike, maybe PP bags cost moving up? Is the availability as well a bit of an issue?
Yeah. I think, cost has gone up. In our case, maybe I think cost increase is not that much. But definitely because of this, polypropylene cost has gone up almost by about, 25-30%. So that is going to impact, bag costs at least by 100 rupees a ton going forward. But in our case, I think impact would not going to be that much.
Okay, so 100 rupees per bag is the likely increase, in the coming month or so, or a month and a half.
Yeah.
And if you want to quantify the fuel price increase, what would it be?
If somebody doesn't have this, inventory from previous, prices, then I think impact is going to be close to about, 250 to 275 rupees a ton.
Okay, so the next obvious question would be, what about price increases? Do you think demand is strong enough that in the next 2 months you can take this sort of a price increase to offset this 250 to 70 rupees per bag higher input cost?
Yeah, demand is good. November 15th onward, demand has been good. In March, there is little bit of sluggishness post-Holi. And perhaps I think that is going to come back to the normalcy very soon. But yeah, demand is good. Cost has gone up. Then definitely, I think price increase has to happen because we cannot really kind of absorb that much cost 250, 300 rupees going forward.
Okay.
I think is a big cost increase here.
All right, and the company we're talking about is Lakshmi Cement, so I think we should just get that corrected as well on the screen. Mr. Shukla, a quick couple of other questions then. Since we're talking about pricing, the hope is you can push through a price increase. But as of now, if you have to compare the average pricing in Q4 with the average pricing of Q3, could you tell us how much higher are prices and break it up for us? If I got it correct, I think trade and non-trade for you, the mix is 50% apiece. So, break it up for us.
Yeah, so in our case, I think non-trade trade is about 56 trade, right?
Okay.
And if you compare prices with respect to previous quarter in trade, prices has not moved up. A little bit here and there, but on an average, I think that remains at the same level of last quarter. But in case of non-trade, prices have gone up a little bit. If I have to really quantify, then maybe about 10 to 12 rupees in different market.
10 to 12 rupees a bag. This point about demand, could you break it up a little bit more? Government spend has been a little bit volatile. So where has this demand really come from? From November second half, as you mentioned, demand came back in a strong way. What was your observation?
November and December, I think there was good demand for non-trade segment. And even January also to a great extent. But now February, March, I see there is a good demand coming from individual home builder segment. So trade segment, which we call it, right? So the mix of, a trigger for demand in the initial 2 months, I would say government spending and of course institutional sales demand. And the last 2 months, I would say more of a individual home builders driven demand.
Okay, and what about premium sales as a percentage of your mix? You had briefly mentioned in the past that you want to see that move up, I think 25-30% or thereabouts as a percentage of your mix. Where is it right now?
We are at about 25%.
You're at 25%, and in the coming year, you believe you can take it to 30%?
Yeah.
And premium sales, per bag, how much higher is it in comparison to normal sales?
So gross level, I think is about 500 rupees per ton higher than the base product.
All right, so approximately 25 rupees per bag.
Yeah.
The other point is, what about this EBITDA per ton? Earlier, you all were talking about getting to that 4-figure mark. That's not really happened, right? Because of input cost going up, and now you'll struggle a little bit as well. Do you still think realistically in the coming year you can get to closer to 900 or 1,000 rupees per ton in terms of an EBITDA per ton?
Yeah, so directionally we are all right, Nigel, because our gap with respect to the leaders in the industry was quite high before. So we have been able to bridge that gap up to a great extent.
Yeah.
In fact, entire industry has gone down, below 1,000 level. You must have seen, result of last quarter of different companies, right?
Correct.
So to that extent, I think we have done fairly well, and we are well directed. And going forward, yes, I think we still believe that, and in fact, we are working on all those, levers by which we can reach to that 4-figure mark in terms of EBITDA per ton.
In sometime in FY27?
Yes, definitely. I think a little bit, I think we are around, and a lot of, levers which we have been working from before, that is going to get fructified going forward. And we are going to be comparable with leaders in industry in terms of EBITDA. That is for sure.
We'll have to see, sir, how you go about achieving that, because that's the big hope, and that's what you all have been guiding your investors. But achieving that is going to be a bit of a task, particularly with this input cost spike. But we take your word for it. The other question is on the balance sheet. You have an ambitious plan to move towards 30 million tons odd. So on an annual basis, what kind of capex spend are you looking at? And update us on the debt number. What is it?
So I think debt-wise, we are quite okay, well within the range, threshold level, right? And the kind of, capex outlay we have going forward. So about, 3,000 crore for 4.6 million ton, which we are going to expand in East. This is what is there on our platter now. For that, we have already ordered equipments, and jobs have started at the, different sites, which is at different level of, progress, right?
Yeah.
So this is what the update is. So, and then, of course, I think we do have plan for other locations also, Northeast and Rajasthan, Nagaur, where we have mining
Mr. Shukla, you're currently at 18 million tons, correct?
Yeah, right.
All right. So you're looking to get to around 30 million tons. As I said, the announced capex is already 3,000 crores.
Yeah.
How much of that will be funded via debt? How much via equity?
It's going to be about, 2:1 ratio. Yeah.
All right.
Debt. Yeah. Yeah.
So debt will be around 2,000 crores approximately, and you will come to the market to raise some equity as well?
Sorry?
You will come to the market to raise some equity. 2,000 out of the 3,000 crores will be debt. The remainder will be internal accruals?
Internal accrual.
All right. And very quickly, what kind of volume growth can you guide for this year? On a low base has been fairly okay. So what do you end this year with in terms of a volume number? And on that base, what can you grow at?
So industry, I think growth is expected to be about 7 to 8%, 7%, I would say. And our growth is, estimated growth is higher than the industry growth this year.
Okay. All right. An updated debt number?
I'm not, having the latest one. So maybe I think I can share that with you.
So we'll re-invite you then as you declare your numbers for Q4, and we'll get an update on that number as well.
Sure, Nigel. Yeah.
Well, Mr. Shukla, it's a pleasure speaking to you. Thanks a lot for giving us some clarity with regard to the ongoing war situation, the kind of impact it will have on cost, which could move up by 250 around 270 rupees. You're indicating demand is strong. You'll outgrow the industry, and EBITDA per ton moving to around the 4-figure mark in the coming year. Appreciate you joining in. Well, on that note, we'll wrap up on this edition of Bazaar, but the team of Chartbusters will be joining you on the other side. Stay tuned.